As an options trader, I figured out how to increase my odds to profit while trading. And I want to share that with you. As you watch this video, please forgive me because I'm super tired. I'm a working man. I just worked 10 hours today. And I'm just super tired. After working 10 hours, I'm coming home just to share information with you and hopefully you could benefit from. So how did I increase my odds to profit while trading options? Well, in order to increase my odds to profit, I had to find edge. What is edge? When you hear traders say, hey, you got to find your edge, find your edge. Edge is only advantage. You just got to find an advantage. What does that mean? Okay, so if you were to play LeBron James and Michael Jordan in basketball, who would win? If it's a 2 versus 1, them together as a team versus you, they would win. Why? Well, they're physical specimens. They're great at basketball, the greatest ever, and you're just a regular person. You don't stand a chance. They have a physical advantage and 10,000 plus hours of practice. If you, in the middle of a forest versus a mama grizzly bear who sees you as a threat against her baby cubs, who has the advantage? Well, the mama grizzly bear. Edge is just an advantage. Traders who have edge, they find some advantage in the marketplace. And so it's just that simple. As an options trader, the easiest place that I found edge is the price that I pay when I'm buying options, whether I'm paying a debit, or the price that I sell at while I'm selling for a credit. That is it. The reason why that's edge is because my break even. When you buy an option and you overpay, you pay too much, your break even is far out away from you. So you are disadvantaged to break even and make a profit. When you sell an option too cheap, when you're selling options and you're selling like really cheap, volatility is low, or implied volatility is low, your break even is very close to your strikes. So it doesn't take much for the directional movement of the underlying to put you in the red at a loss. So the price of your strategy that you pay or you receive while selling is critically important because of your break-evens. Stated simply, when you place an order, do not pay the first price that you see. Do not buy or sell at the mark. Negotiate. Negotiate price. That's your edge. I have resolved myself to never pay the mark. The first price that I see, no. If I'm gonna buy, I'm gonna buy less than that. Always. Every single time. I wait for volatility crush. If I'm gonna sell, I sell for more than the mark. Because it gives me a buffer. This is the mark. The mark is halfway between the bid and the ask. This is the mark. If you manage to get your order filled below the mark, you just created edge for yourself. If you're selling and you sell higher than the mark, you created edge for yourself. It's an advantage that you have over other traders. They will be in the red at a loss before you are because they paid more than you did for the very same thing. That's the base. That's the very beginning of you building an edge for yourself. Then you can add more and more layers of edge to increase your probabilities of success. Because while you're trading, success is not guaranteed for any trade, literally at all. All you're trying to do to become a successful, consistent, profitable trader is stack the odds in your favor. And that is part of your stack. The edge of the options prices that you pay or the options prices that you sell at. Negotiate. Negotiate price. That's your edge. And sometimes you never get filled, but that's fine. So be it. Because you know what that means? That means you just preserve your self capital. You're not entering a trade unless you know for a pure fact that you have an advantage. Negotiate. Negotiate price. That's your edge.